Varonis Systems. Varonis Systems provides software products and services that allow enterprises to manage, analyze, alert, and secure enterprise data in North America. Sounds like a security software company. Yeah. Protect data both on premises and in the cloud. Okay. So this is a security company. Pretty good size, 2,200 employees. All right. And I'll take a peek at their website just to see what they're all about. Yeah, it's a security software company similar to CrowdStrike or Palo Alto. Looks like they have good ratings from the analysts that cover this industry. Gartner's the most recognized name. Forrester's also a recognized name. I'm not familiar with this one, but I'm familiar with Forrester and Gartner. All right, so I'm kind of got a sense of what these guys do. They're similar to CrowdStrike, Palo Alto, Zscaler. So let's take a look at the fundamentals behind this company. So this is, it was down 1.34% for the year. It's pretty much flat. It had a nice run up and then it came back down. So looks like they hit their peak October 15th. And since then, the stock's gone from roughly $60 per share down to $45 a share. That's a pretty good drop. That's 35% drop. So that's a pretty good drop. It's a small cap of $5 billion. Revenue is $546 million. They're going to announce on February 4th. So we're roughly about 2.5 weeks from that earnings being announced. Looks like they're not profitable yet, but forward PE, I think this is 2025. They're going to be slightly profitable. That's why you see such a high PE. Analysts like the stock. They think it's discounted by 32%. And they're saying, hey, it's a good buy. All right. So they're a $546 million business that's growing at 12%. That's good. That's good growth. It's not great, but it's good. In their space, I know that others are growing faster. Okay, so we got 12% there. They are generating free cash. Very good. And gross margins are excellent, 84%. That's why I like software companies, because they have super high gross margins, super high free cash flow. Very good combination. So this business, the type of business it is, I'd probably go 20 to 30 times free cash flow. That puts us at probably about $2 to $3 billion of value. You could stretch it up to 4, but I think this one might be a little too expensive. We'll see. Let me take a look at their balance sheet. I want to make sure they don't have too much debt. In the case here, they have more cash than debt, so they can pay off their debt immediately if they wanted to, because they have more cash than debt. That looks good. Let's take a look at their forecast. So analysts will review a stock, and 18 analysts cover this stock. So that's good. We have a lot of opinions on this stock. And some are very optimistic, saying, hey, this stock could get up to $70 per share. The most bearish opinion puts the stock at 46. So you see where that pullback has really brought the price of the stock way down, potentially opening up an opportunity to invest in this company. But we'll see. We'll look at the fundamentals. So looking at, on average, they think the stock is discounted by 32%. I like looking at this revenue forecast because this is a consensus forecast. And for 25, they're going to grow at 12%, 26, 15%, and then 13% in 27. It's a very good forecast, very positive. And they're going to get more profitable. They're going to grow. They're going to expand their earnings per share very nicely. So that does look good. Earnings per share may support the stock price that they have, but the trick to it is, it's let's take a look at that free cash flow again. I'm going to look at the actual statement. And it's 97 million for the trailing 12 months. But let me look at the most recent quarter and see what their run rate is. Maybe the last quarter, maybe the last 2 quarters. And yeah, the last quarter was only 21 million and then 10 million before that. So I have to, kind of respect that they're probably going to grow cash flows, but it's not going to be a smooth chart. And yeah, the best I can do on this one is say it's this company's worth 3 to 4 billion at this point with the current cash forecast that they have. I think it's a really interesting business. But the other reality is you can invest in CrowdStrike, Palo Alto, Zscaler. You can invest in a variety of ones. And I think Zscaler really is discounted at a really good rate. I'd rather invest in Zscaler. I think it looks really good. So I'd have to pass on Varonis Systems. I think it's I would give it a couple quarters. And if they have really good results, and it really shows they have the upward trajectory on their revenue growth and their free cash flow growth, we would, I mean, then maybe this stock's a good buy at that point. But the scare that investors have had recently may be founded, right? They might be like looking at the numbers going, hold on a second, this this business is not quite good enough. Not yet. Maybe it'll get really good, but it hasn't gotten there yet. And there's some competitors in their space that have really good numbers. So just be aware of that. It looks like Mike, I have Zscaler, but I have. So you have a small position in it. All right. Well, I hope it works. Now, I'm not saying that they're not going to turn into a really, really promising stock. I'm just saying the data is maybe a little. It needs a little time, maybe two earnings releases, and then we can really get our heads around what's this business really going to do from a fundamental perspective. So that's my opinion on VRNS. And thanks for asking about this one. That one looks really interesting. Looks like Tomas joined the call. How are you, sir? Very good to see you, and hope you're having a very nice evening. So, yeah, you and me. Sometimes I look at a stock and I think, oh man, it's just a really neat stock to have, and I've done that before as well.